everything today. So how's everybody doing today? Everybody great? Everybody's suffering from the cold. Is there anybody there that is suffering from the cold? It's really cold. I'm in Detroit, Michigan, and it is freezing here. We are at 3 degrees Fahrenheit, and we have a wind chill of about minus 18 degrees, so pretty cold here. Okay, guys, I want to thank you so much, Trading Point, for having me here tonight, and I want to thank you 75 degrees. Oh my God, I'm envious. I should come for a visit. Okay, guys, so thank you so much for being here. We're going to start right now. So why swing trading earnings season is for savvy traders. I think we are going to kickstart earnings season next week, and I think it is really important to touch upon this base and to start it on the right foot. 57 in Denver, Colorado. Oh, you know what? Not bad at all. Actually pretty cool. Okay, guys, so let's get started here. Okay, before we continue, please take a second to read the full risk disclaimer, but I just want to tell you guys that everything that we're going to talk in here about is for educational purpose only and really should not be construed as investment advice. And we're not registered nor licensed, so guys, if you really need financial advice, consult your financial planner or advisor. So please take a second to read the risk disclaimer. Okay, so Rolly, thank you so much for the presentation. As you heard, I'm an independent professional trader. I am focused on equities, futures, and currencies for the last 10 years. I'm an active trader in the market. I'm also the founder and CEO of Trade-A-Thon, which is a trading education firm located in Detroit, Michigan. We do have a lot of educational live classes here in Michigan, and we hope to extend that throughout 2015 throughout the United States. Also, I have over a decade of investment banking experience, and this is prior to becoming an independent professional trader. And so I do come from a finance world. I am certified from numerous financial institutions throughout Europe and US. I run a managed accounts program for a group of high net worth clients right here in Michigan. So I do own my own hedge fund. I'm running also a swing and investment signal service for stocks and ETFs, and basically I'm copying a lot of my trading ideas that I run my account with for a select group of clients. I'm also the author of Trade Out Loud's educational material and manuals, and I'm the designer of a proprietary trading system that is based on price action, price support resistance, trigger times, chart correlation, and a strict set of trading rules. I'm also an active contributor to a lot of magazines in the financial media. And you're probably asking yourself, why should I listen to her? Okay, there are a lot of reasons, and I'm going to share with you some of the reasons why I think, sometimes it is great to listen to other traders that are successful in the market. And why is that? We have been for a very long time the most trusted source for education and coaching programs. We are certified in this matter. Also, we have excellent feedback from our worldwide traders, and when I mean worldwide, we literally have worldwide traders that are in our programs. And I also have over 10 years of professional trading experience with a proven track record. And this is proven track record. And guys, this is what I'm talking about. Proven track record. We have been certified and tracked by a third party. So a third party has verified our trades for 2014 to bring you transparency. So it's one thing when I tell you, okay, my account is up 30%, 40% for the year, and it's another thing when you see it certified by another company, okay? So overall, these are the results from 2014, and actually December 5th. I don't have an update. I should get a current update in the next few days. Our portfolio was up on December 5th with 28.93%. Right now it's up over 57%. We still have some really strong winners in the year end, and we did run into a great streak with window dressing, Santa rally, so we had a really strong end of the year. we're going to talk about how to trade seasonality in a little while. So we beat the S&P 500, guys, for the 4th year in a row since we have since the inception of Trade Out Loud. Okay, you want to stay in touch with us, guys? You can reach us at info@tradeoutloud.com. Also, if you have questions regarding the presentation, please post them at the very end. And if you're not going to hear your question answered, please email it to me at info@tradeoutloud. I will personally answer your email. Also, you can find me on Facebook, facebook.com/tradeoutloud. Also, I'm on Twitter at Anka Metcalf. And of course, you can visit our website for more information and details. So here's the agenda for today, guys. We're going to talk about earnings season. I'm going to explain to you exactly how I trade earnings season, and also known as gap season, my favorite seasons of all. It's the most active season in the market. And I'm going to show you some tips and tricks on how to trade it safely, to be on the safe side and capitalize on those maximum price swing, violent price swings, and how earnings season, how earnings reports influence your swing trades. This is very, very important, especially for those of you that have been swing trading unsuccessfully. Also, how to make money in earnings season. And also, we're going to be talking about charts at large. I'm going to give you a game plan for the upcoming earnings season. We're going to talk about stocks that are due to report earnings. Let's not forget that next week we kickstart earnings season with Alcoa. Monday, after market, Alcoa will report, symbol AA. So we're going to take a look at that, and we're going to take a look at some of the companies that are due to report earnings next week. So it's going to be very interesting. It's going to be a very, very interesting season. And I'm going to share with you guys, and this was unexpected, but I just wanted to include it here. This is my personal 20 stock list to own in 2015. These are going to be good swing ideas, and at the same time, position trades, guys. You might want to take a look and have them in your portfolio. Okay, so earnings season explained, guys. So as you can see from, yeah, yes. Okay, I'm going to restart it again. Can everybody see the chart? Okay, did you guys get a chance to see the agenda? Okay. Okay, perfect. I will. Okay. All right, guys, so here's today's agenda. We will be talking about earnings season explained, also known as gap seasons, and how earnings influence your swing trades. And you know it is very important to know how to swing trade, especially when a report is due to come out on a stock that you're already in. Also, how to make money swing trading and earnings season. There's some tips and tricks that I'm going to share with you and what I apply on a day-to-day basis in my swing trading. And also, we're going to talk about charts. I'm going to present to you a game plan for the upcoming earnings season. We're going to kickstart earnings season next week with Alcoa that will present earnings Monday after market. Also, I'm going to share with you guys my personal 20 stocks to own in 2015, and I think this is a great opportunity for those of you guys that want to scan and have not found yet anything worth taking a second look at. So these are my top picks from over 6,000 stocks that I have scanned. Okay, so let's get started, guys. We have a lot of material to cover today. I really want you guys to get out a lot of information, as much as I can offer you in this presentation. So here it is, earnings season explained. So as you know, there are 4 major earnings seasons, right? There's the first quarter, the second quarter, the third quarter, and the fourth quarter. Fourth quarter being the winter season. So we are still right now in the winter season, right? Okay, so winter season is known as being the most active trading season of all. It is also the last quarter of the year and it marks the year end, and it comes with a lot of events. First of all, what I want to mention is that each of these 4 seasons, you can see it right here represented in a tree that is divided in 4. Each of these seasons is divided in 2. There's an active season and there's a passive season. So in this active season, the majority of companies are reporting earnings. So this is the first part of earnings season when you're going to get a lot of follow through. And then there's the latter part of earnings season when things start to quiet down and things are a little bit slow, and you don't get that follow through, you don't get that push, you don't get that full throttle in the market that you have in the first part of the season. Now, remember, each of these seasons you trade differently, and they come with all these different events, okay? So for the winter season, it's full of events. First of all, you start the season with earnings season, right? So for the first month, so the month of October is extremely powerful. And then the latter part of, November and December, you have some other events that are influencing your trading, and that is what? The holiday trading around Thanksgiving. You have the cornucopia trading. You have all these events. You know that at that point in time, you got Cyber Monday, you got Black Friday. At that point in time, you know that you have to focus more on retails, transporters, and so on and so forth. That is getting ready. That is the kickstart for holiday season. There's a lot of shopping, and a lot of that will be translated into the first quarter reporting, which is actually the results from the last quarter, right? So you have a lot of things going on. You have window dressing, you have January effect, you have Santa Claus rally, you have all these elements in the fourth quarter, which is usually what I do in my fourth quarter. I make most of my money. Okay, so it's a very, very active season for me personally. Okay, now there's spring, there's also spring season. Everything comes to life, okay? And we're getting, usually in this part of the season, you have a trend continuation, okay? So whatever is starting to trend January, February, you're going to see a continuation through April, May. All right, so usually you get a trend in spring, and then summer things start to really slow down a little bit. Sometimes it is a little bit sideways, sometimes it is a little bit thin, and then you jump start into fall season. And again, but the overall idea is to divide each of these seasons in 2, and to make your game plan and to make your trading plan as to focus on earnings season and this gap season, because this is the bread and butter for the day trader and also for the swing trader. You're going to focus your energy, you're going to give it everything you've got in this first part of earnings season, okay? So gap season, very important, the most money you make in this season. Now, I'm going to ask you guys, how many of you guys took a trade, regardless of, maybe it was in the second part of earnings season, okay? And how many of you guys right here, right now, took a swing trade and it was just like watching paint dry? It was doing nothing. It wasn't going up. It wasn't going down. Even though the market was, in full throttle, was going higher, or the market was in correction, was going lower, your stock just did nothing, okay? How many of you guys? All right, nobody? Okay, most of, absolutely, and again, you're going to see that you don't get the follow through and especially in the second half, and you're going to see that you're stuck in that trade. You don't get a lot of follow through to your target 1. Never mind that target 2 or 3 or 4 or what have you, but you're utterly stuck in that trade and you have that money invested. Now, here's the thing. You have to have a game plan. Invest your money and invest in your trading in the first part of earnings season when financials report, when tech sector reports. That is the most active season. Okay, excuse me. So, guys, bottom line is that earnings reports equals wild price swings. And what does this mean to us? It means a lot of opportunity to make a lot of money. So this is why we're going to focus all our aggressive and active trading in the first part of this earnings season. So earnings season, as you already know, it is also known as gap season. Okay, so earnings season is the period of time during which a large number of publicly traded companies release their quarterly earnings reports. Earnings season reports begin with January. Like I said, next week we're going to start with Alcoa, and then the next periods are April, July, and October. These 3 months are the most active months there are in the year. So July, guys, for those of you that think that, okay, I'm going to take July off, think twice, because the beginning of July, when all these earnings reports are going to come out, it's going to be super active, all right? If you want to pick a month to go on vacation, choose August. That is a little bit slower and not a lot of trading activity going on, but July is still really, really juicy. Okay, so excuse me, guys, I still have a little bit of a sore throat. Okay, so earnings season explained. Earnings season brings great opportunity for momentum strategies, whether you're a day trader, whether you're a swing trader, whether you're a day trader and decide, you know, that you're a scalper or a trend trader, you trade small time frames, or you're a swing trader and looking to hold trades from 2 days to a couple of weeks or so, it is a great trending strategy. You get a lot of momentum strategies that are rolling in this time. Also, setups are being developed even before the opening bell, and according to where price is positioned, so where it gaps, so where it opens, there is a strong possibility of a trend continuation action. That is where and this is what we aim for in our swing trading. So guys, it is very important to focus on these gaps. Now, I don't encourage everybody to trade pre-market or aftermarket. I'm going to show you some examples and some charts later on with some stocks that are reporting earnings as we speak right now, like Bed Bath & Beyond, BBBY. I was just watching it. Aftermarket reported earnings from about $80 is down to about $74 when I last look at it. Am I going to trade it now? No, I'm going to wait for the next day. Okay, so make sure that you don't get overly aggressive. Make sure that you have a game plan and you wait for the active market hours. Also, entries and setups can be found on small time frames on intraday charts and smaller risk and higher that have smaller risk and higher odds for follow through. So there you have it. Once a stock gaps, and the gap is that difference between the close price and the open price after it reports earnings or after a rumor or after some news. Okay, so make sure that you identify that area and make sure that you identify that area within a potential strong trend that has a possibility of continuing that certain trend. Okay, so here are some things to do and some things that you should not do. So like I've mentioned before, earnings season is divided into two into two areas. Okay, there's an active season, and then there's the passive season. Earnings season right now that we're going to start next week, we're going to start this very, very active season. Okay, and this is the time when you're going to see a lot of follow through on stocks. This is the time when you're going to see stocks reach targets with ease. They're going to fly through target 1, target 2, target 3, which is not very common for the latter part of the season. Okay, it is very, very uncommon. Okay, now there are exceptions to the rules, right? Like for instance, I own a stock, Walmart, WMT symbol, which is absolutely rocking. Okay, the market was going down, very small retracement on Walmart yesterday and today. Unbelievable. It reached 3 targets in 1 day. So there are exceptions to the rules. There are exceptions, and these are unique trades, and they're also based on fundamentals. But if you focus only on technical, this is what you should go for. Okay, so you get extreme follow through on these particular days, on these in this particular first part of earnings season. And so you have ease at reaching targets, you have that rhythm, you have that momentum. Okay, and you have more trading opportunities, you have more setups that develop due to these gaps, and you have potential trend continuation. So if you have a strong stock in a strong market environment and you have strong earnings, that stock might continue higher, okay? So it's not a guarantee, and we're going to talk about the exceptions a little bit later on, but it has odds of continuing higher and faster, okay? So what are you not going to do, okay? What not to do? What not to do in earnings season? Never take a swing trade ahead of earnings. And why is that? Well, you know, I get a lot of questions from potential members of my program, and they ask me, okay, what do you do when you're in a stock and that certain stock reports earnings? What do you do? Because you can find yourself, you know, a few dollars down. So what would happen if right now I would own BBBY, all right? I would initiate a trade in BBBY. Let's say it went up for 2 to 3 days or 5 days. I would have taken a buy that would form, okay, a la carte, you know, you watch for support levels, watch for what have you, okay? So take a textbook setup, and then what if I keep it? And right now, what if it would be down $6? That would definitely be devastating for my account, right? So what do? I don't take that trade. I do not take any trade ahead of earnings season, all right? So if I have Alcoa that will report on Monday, I'm not going to initiate a trade at least, I'm not going to initiate a trade, you know, 2 or 3 days prior to that period. I can actually take that trade a week or maybe 2 weeks before it reports earnings, but you better make sure that 99% of the time I am going to get out of that trade before it reports earnings, okay? Before it reports earnings. I'm not going to get stuck in that trade because I hate surprises, and so does Wall Street. Wall Street doesn't like surprises, and I think none of the traders like surprises, and I don't like market surprises as well. So for that reason alone, I am not going to take a trade ahead of earnings. So it's very important in order to alleviate stop outs, okay, at really the worst case scenarios that you have in the market. It's going to just slice through your stop. It's going to give you the worst possible stop out level. Do not take any trades at least 2 to 3 days ahead of earnings. Do not initiate a trade. Wait until earnings are out. Evaluate to see if the price gaps or not. It's not, you know, and it's not necessary for the price to gap. Sometimes they just open flat, even though they have, let's say, good or bad earnings. It really doesn't matter. But at times, you know, they just open flat. So evaluate the trend and continue to trade with the trend. Have a little patience, okay? And here it is, non-gap season. I call it non-gap season. It's the most passive season. It's a non-gapping season. You're not going to have a lot of follow-through in this season. So basically, if you're in a swing trade, or even when you're in a day trade, you see that the stock doesn't move. It is just stuck, and it has a really hard time not reaching your target. But you know what? It triggers, it pulls back, and it just stays there, okay? You're barely at break even, or you're barely in, you know, kind of like in bearish territory with your P&L, but overall it's not doing anything, and you have a textbook setup. That's the reason why you don't have market participation. You don't have a catalyst behind the market to move the market for you, and in order for you to create that traction, that fluidity to reach your target, okay? So stocks have really hard time reaching your targets. You lack that follow-through. Targets are really, really hard to reach. And in this case, you got to focus on some unique trades. Now, of course, throughout earnings season, you're going to have upgrades, downgrades, and these are going to be the catalyst behind the move. But anyways, look for these unique trades that you may, you know, stocks that are on their own, just ignoring all the other, you know, market and market environment and even what other stocks within the same sector are doing, okay? And of course, lack of trading opportunity. You're not going to see a lot of setups occur around this time. It's going to be really whippy, or you're going to see a lot of bases that are basically going nowhere, okay? Here's some examples, and let me see how we are on time right here. Perfect. Okay, so here's an example. We had SONC gap up on January 7, and this was yesterday. And we had a gap up on earnings, and this is what happened, guys. So I took this picture yesterday. Okay, took this picture yesterday. See what happened. So this is the close price right here. Okay, now the stock gapped up. What you see, first of all, you notice the location where? Well, first of all, we notice that it is above resistance area. This is the resistance area. So right here, we have a very, very bullish gap with a strong continuation, with strong odds of continuing higher. You're going to see a high of $31.59 on the daily chart. Now, side by side, remember what I said, zoom in on the technical picture on a smaller time frame to see if you could get a better entry, laser sharp entry, guys. So as you can see, the whole trading activity from yesterday, created a gap up support right here at about $29. Also, it is at a whole number level. And if you were asking what are these lines on my chart, this is the 20 period moving average, simple period moving average, this is the 200 period moving average, and here the same thing, 220, and here I have the 10 exponential moving average, which is more accurate for, especially for day traders. So you can see here how the stock gapped up, and this is the behavior. This is a whole day behavior. So what happened yesterday, it remained strong. It remained with the support level above $29, whole number, psychological number area. And you can see here, it kind of sandwiched between $29 and $30. So it created a shelf of resistance right here. So it just went up and then came back down. It just grinded here within this base right here. Now let's take a look. Let me just put it on the chart right here. So I'm going to show you my game plan for SONC. Okay, let me just bring the chart real quick. Okay, so for SONC, this is the gap right here. This is the gap up support, $29 right here. So any break over $30 can propel it higher into a target area of $31.50, and another calculated projection into $32 and $33. In the meantime, let's see what the stock did today. This is the daily chart. As you can see, $30 is right here, popped up right into our first target area, $30.50, and $31, our second target area. Let's move to the hourly chart. You know what, I'm going to go to the 15-minute chart. Okay, and then we're going to go to the hourly chart. Okay, here I have some pre-market data. Let me just get rid of that. Okay. All right, here it is, guys. This is yesterday's base, $30. This is the area right here. This is the gap up support at $29, approximate area, $29.20. So remember what I said, any break of $30 area can propel it higher into $30 and into $31 and $31.50. So by $30 right here, $30.50, I'm sorry, $30.50 was target 1. Target 2 at $31 and target 3 at $31.50. So what it did, it just broke the base higher. You could see the trading activity for today started with the rocket bar higher right from 9:30, and again the market started really strong, and they did actually what it did a pre-market rally, overnight rally actually, and it did reach our target 1 level, $30.50, ran a little higher, paused, created another low right here before continuing higher into our secondary target at $31 right here. So at $31, guys, if you would have risked $500 with an entry above $30 and a stop below $29 right here at $31, you would have made one reward unit. What that means is that if you have risked $500 here you have it, $500, okay? So by this time. So this stock definitely has a lot of potential of continuing higher into $31.50 and $32 and even higher. So it does have a lot of odds of continuation. So this is how I look at the gap. So remember, not only, so you're not going to only look at the technical image on the daily chart, but you're going to zoom in on the time frame that will offer you that piece of information that is missing from the puzzle. Sometimes you can see that, you know, there are stocks that align better and even ETFs that align better on the hourly chart, and there are some that align better on smaller time frame charts. Sometimes they line up even on the 2-minute or the 5-minute, and sometimes on the 15-minute. But in this case, the 15-minute was the clue for SONC. Here's another one, ANF Gap on earnings. Here it is, guys, strong downtrend going on to the daily chart, even on the weekly chart and the monthly chart. And what happens here is that what happened on earnings, it gapped down. It gapped down below support level, continued to trade lower, continued lower, and you can see when it actually retraced, it formed its own resistance. And if you take a look to the left, this pivot right here formed that shelf of resistance for future price action for this particular area right here. As you can see, it was extended from the 20-period moving average as well. So it continued lower. So bottom line, guys, is that really, you should not take a long trade in a downtrending stock, especially if it has earnings pending the next day or the next 2 days. Okay, so what would have happened if you see this perfect buy setup that is forming right here? You would have taken this, place your stop below this pivot low right here, this swing low, and actually you would have made a lot of money, right? A lot of money into this resistance area. This was your target area. But what happened if you didn't take your profit here? So even if you take this buy really ahead of earnings, and if you have this gift right here that kept on giving you into this resistance area, you should have gotten out. If you were not out, the next day you would have paid for it, okay? You would have paid dearly for it. And this was a really bad surprise for all these traders that were still long in this position, okay? So that's why never get stuck in a trade, and this is the perfect example. Never get stuck in a trade that is due to report earnings, okay? So here's another example, the gap on earnings on KLAC. KLAC, really strong uptrend. Onto the daily chart, and first of all, let's take a look take a look on the weekly chart. You can see the super strong trend on the weekly, right? Super strong trend. Now let's go back to the daily chart. This is the trend right here, hit a high, early high, $84.21, and boom, you get a gap down. Gap down, which is located very close to the support area at $65, and this is actually a multiple area of support right here at $65. So what it did, it actually gapped down really close to the support area, hence the bounce that happened here, and then turn around at this 200-period moving average, came back down, retested the support area, came back up, decided to test a little higher, formed its own area of resistance right here, which is actually the ceiling formed by this pivot high right here back in October. And then again, it went back down. So you can see right here that it is stuck like into a purgatory. It is really not defined what this stock is going to do. Now, what's the game plan on this? Heavy area of support. But once this price action remains contained in this sandwich right here, sandwich between 65 and about 76 or 70, I'm sorry, 74, okay, it's just going nowhere. We need a definite clue and a definite direction in order to have a high-ass trade. So guess what, guys? If KLAC over the next, I don't know, few days, few weeks, few months, if it's going to test again the $65 area with this gap down right here, okay, and remaining within these parameters, if it slices through $65, guess what, guys? It's going lower, and it really will test lower prices. But if it's going to go up, okay, over this resistance area, then it has odds to continue higher and probably test this about $80 area right here. And then if it's that bullish, it might go up higher into 84.21 area. But nevertheless, you know, it remains contained. It's like in a purgatory, like I said. It's not going to go anywhere, okay? You could take advantage of these small buys and small sells within these area and treat it like a base. But other than that, you're not going to expect a lot of price swings. And at this point, you have 50-50 chance of going higher or lower, okay? So it all depends. We're going to have to wait for earnings on this. Okay, and here it is, guys, $65. It has been tested not once but twice, but 3 times, almost 4 times into this area. And we do have another congestion area from a prior low right here, and this is from back in April. So again, we are in a very strong uptrend, but again, how long can it last here? You can see that it has huge symmetry right here. It has a huge congestion area right here at $65, and if this area is broken, the trend is going to be changed, and this might come down. It's not going to be an easy way down, but I should expect targets into the $60 for KLAC. Here's another chart, ORCL. We have a gap up on ORCL. This is a daily chart, And this happened December 15. Got a beautiful gap up with continuation for about 4 days. Now, remember, guys, after the stock gaps up, it usually continues higher for 3 to 4 or maximum of 5 to 6 days. This is the maximum length before it turns around. So remember, whenever you're taking a swing trade, you have to make sure that you either capitalize on that gap opportunity, or if not, make sure that you wait a little bit after the gap is formed and wait for the next buy to occur on the time frame that it aligns. So I could tell you, okay, look on the 15-minute chart, but it may not align perfectly there. It may align perfectly on the hourly chart. So therefore, you got to have a little bit of flexibility in playing with time frames. Okay, and this is ORCL intraday entry opportunity right here, and these are some examples. So this is the gap up price support that is formed from the from that very day. This is the entry right here over the 15-minute bar with a continuation higher and a pullback. And as you can see, until Friday, this is Friday, first day of trading, went really well. Then the second day of trading went really, really well. And you can see right here how you can capitalize at least in these 2 days. So if you want a less aggressive swing, okay, with for a shorter period of time, you can actually make a lot of money on these gaps and swing them, especially on strong trends. And these are the key. Now, what happened here? You can see a little bit of a gap down. And if you're one of my traders, you know that this is a damage control situation right here, and you know that you're not going to get out. This is a 15-minute chart, and you know that you're not going to get out on this bar, on this very, very small gap down that had happened on the 15-minute chart right here. Okay, next one, trip, gap location. Where did this gap to? And you can see right here, it's a weak overall, weak stock overall. You can see the strong downtrend that is happening right now. And of course, it gapped down below this support area. This is the low right here from this pivot, from the swing low. Price gapped below, remained weak. It created its own support level at this price level, and when it swung back up, it just went into the same congestion area from the prior swing low, and it just danced around here, and again, it created its own purgatory, if you will, right here. And again, it is sandwiched. It's not going anywhere. For a confirmation, and again, for aggressive traders, you can look to buy or to sell off these areas, but again, I'm not going to do that. I'm not a liquidity provider for the market. So my game plan is, if you get a break below the support area, I'm going to let them test it, and then on the first setup, that happens after the test, that's when I get in. And same thing for above. So any break above this area, I'm going to wait for them to test it, and then I will wait for a comeback into the support area for my future stop loss area, and then probably to take it higher. But this is, it really depends on what it is going to do. So why you should not take this trade ahead of earnings? Look at this consolidation right here. And very often you're going to see a lot of stocks that consolidate ahead of earnings. Okay, so if a stock is due to report earnings, let's say that day after the close, you're going to see that a lot of times these stocks are going to base. Okay, so for those of you that are day traders here, remember, make sure that you do not take any kind of base breakouts or breakdowns ahead of earnings. Okay, here are some conclusions. And after these conclusions, we're going to come with some really cool stuff. So due to the constant release of earnings reports, stocks have a much greater likelihood of rapid price swings. Okay, now we capitalize on these rapid price swings because for us, they're dollar signs, right? So market reactions create incredible volatility. Even companies who haven't yet released earnings reports are vulnerable to the frenzied price actions, right? And why is that? Just take a second and think about Google or Apple. These are such big parts of the Qs, right, of the ETFs, of the Qs. So being such a big part of the Qs, of the, and being such big parts of the tech sector itself, Okay, remember that if they have bad earnings, even a stock like, I don't know, like Cisco or Intel that is really well performing is going to be influenced by, let's say, bad numbers on, let's say, Google or Apple or Netflix or what have you. So remember, even the strongest stocks from the same sector, when these big guys report, they're going to be influenced in one way or the other of the price action of the stock that is due to report earnings. So very, very careful here. Oops, sorry. Also, stock do not always gap on good earnings and do not gap down on bad earnings. So technical chart is key to deciphering areas of interest. Okay. Now, I just want to share with you guys, back in the day, oh my gosh, so many years ago, when I first started trading, I would listen to CNBC, and all you would hear, like, I don't know, 12 years, 15 years ago, all you would hear on CNBC would be like fundamentals. You know, you wouldn't hear anything about technical. Like, and now, you know, even starting in the last year or so, last 2 years, you would hear Kramer bring all kinds of technical analysts on the shows and talk about Fibonacci's, talk about price support resistance, where you didn't have that before, okay? You didn't have that. So more and more traders are focusing on technical analysis, and more high-frequency trading computers are programmed based on algorithms that have technical analysis at the basis. So that's why technical analysis is key to deciphering the area of interest for an entry in a trade. Not necessarily, you know, in a swing trade, but in a day trade as well. So to successfully trade earnings season, you need to have a proper education, and you need to apply proper risk management. So it is imperative that you absolutely have a very good understanding of key market areas. Okay, now the only two, and this is very simple, the only two earnings rules, guys, and these you have to remember, they're super simple. So rule number one, trading earnings season is at times deceiving, okay? Is at times deceiving, because what I said before, that if a company releases a positive earnings report, it does not necessarily mean that that stock will go up or will gap up, and the other way around. On bad earnings, you're not going to probably see a stock that is going to gap down, right? And sometimes you see stocks that open flat, okay? And in that case, don't ignore the fact that they're flat, and don't say, oh, it didn't gap up or it didn't gap down, I'm not going to trade it. No, on the contrary, if it didn't gap, it means that it will continue the major trend that it is in. So if you have a major trend happening on larger time frame charts, meaning the weekly, the monthly, or the daily, okay, you're going to take the next buy that occurs on the daily or the hourly chart in order for continuation higher if the setup occurs. Okay, and there are external factors that are influential, and such as price momentum, support and resistance areas, earnings performance versus analyst expectations, right? You have all these analysts that are coming out, and you know they're talking about their expectations. There are whisper numbers, okay? So you know, the one thing that you have to take into consideration is basically technical analysis, and also performance comparisons to industry competitors, right? Okay, so why is that, guys? Why? Well, because day traders and swing traders make money from the volatility created by earnings reports, and not necessarily by the fundamental strength of the earnings themselves, right? So profit potential for investors and traders correlates directly to fluctuations in share price. So this is what is key, okay? And here's rule number two. Wall Street absolutely hates surprises, just as you hate surprises as a trader, just as you hate surprises and I hate surprises as a swing trader, okay? Remember what I told you about that example, that if I'm in a stock, let's say I'm in BBBY long, okay, and right now and don't forget, guys, because at times it may happen, you may forget that you own a stock, you may forget you were in a swing trade, you go on vacation, and you find yourself that instead of being up because you were up, you find yourself that you're suddenly down the next day, and down big and huge. And that is if you don't have a stop and if you don't get filled at a really, really, ugly price, okay? So here's the example. Let's say there are 5 out of 5 market analysts expect losses for a company that is due to report earnings the next day or week. Now, when the company's earnings report is out and it matches those expectations, the market response is usually what? Oh, no big deal. It was expected. The stock doesn't drop or go up because investors were expecting the earnings report to reflect the analyst's prediction, right? And when earnings report matches expectation, no one is surprised. And no surprises mean the stock market tends to rest easier, right? Okay. Now, let's get to the interesting part right here, okay? How to make money in earnings season, okay? How do we gonna make money? Now, remember, we have to be savvy investors and profit from earnings season, from swing trading earnings season, right? And here's how to make money. These are some 10 simple things that you need to respect every single time you take a swing trade. And take a piece of paper, a pen or a pencil. You might want to write some of these down. Some of them you may already know. Well, first of all, here's the key, and this is what I do. First of all, I start scanning. Remember, there's that quiet period in the market, okay, in the latter part of the quarter. This is what I do in that part. I scan, and I scan for companies that have a good track record of releasing positive earnings reports, okay? Just as there are, some companies that have a track record of releasing negative earnings reports, right? So you may actually scan for positive and negative, and you may actually correlate that with the trend that the company is in, okay? So if you have a company that historically comes out with bad earnings and it is in a downtrend, guess what? That is a great candidate for a short position, for a short swing trade. And the other way around, if there is a strong company with a strong track record of positive releases, and if that particular stock is in an uptrend and it comes, and that is a great candidate for a continuation higher, okay? So scan for these in the quiet period. Now, once you have selected the best candidates, compile your hot list, compile your watch list, just make a list of those, okay? And check their earnings dates, all right? Make sure you make a note, and you can set a reminder on your platform. Just set a reminder for that particular day, okay? Now, remember that, even with the earnings calendar, there might be some surprises because there might be a company that is due to report earnings, and you might find it in the calendar. But, it's not mandatory that that company should report at a certain time. So make sure you watch for updates, okay, for that particular company. So when that company will report earnings. Now, the third thing to do is to look at the technical picture, and this is key right here because this is going to give you your entry, your stop, your potential target. So make sure that you have the game plan already set before before the stock even reports earnings. So first thing that you need to do is check the trend, whether it is in an uptrend or a downtrend, or even if it's basing. That's an interesting situation because if it is in an uptrend and it's basing, it has odds of continuing higher. If it's in a downtrend and basing, then it has odds of gapping down below that support level, and it might have odds of continuing lower. Okay, so make sure you check the trend. Make sure you trend support and resistance areas because they're going to constitute your stops, and they're going to represent your targets as well. And make sure that all the stock that you're looking at have room to run with a major trend. Now, what I mean by that, they have a fluid move to your next target areas. Now, if the stock is at an all-time high, make sure you apply the proper price projections in order to know where the real swing traders, where the real institutional traders are looking to take profit. It's very important because if that stock is in a void, what are you going to do? What are you going to go by? Okay, so you're going to say, oh, it's in a void. You know, I'm going to trail it. I'm going to do this. No, you know, and trading it's really an exact science. Okay, so you have to know for sure the area of interest. So that's why it's imperative for you to know if it's into a void, what is the calculated move higher? What is the projection? What is the price projection? And you can use Fibonacci to do that. Okay, so number 4, never initiate a swing trade ahead of earnings, especially 2 to 4 days ahead. Now remember what I said. Even if you have a very good mouth-watering setup that develops, let's say 5 days ahead of earnings, okay, you can take that. If it has a small risk, yes, and into the first, and if it has room to run into the first target area where you can actually make some money, at least one reward unit into that area, that would be acceptable. You could take it off the table at least 1.5. You could take it off the table then and get back in, okay? And then wait for the earnings report patiently, okay? Patiently. Don't trade pre-market, don't trade after-market. Number 6, watch the initial reaction on a minor time frame on your charts. What I mean by that is that you're going to see the trader's psychology translated on charts in the first 30 minutes of trading, and usually it is best for swing traders to allow at least 30 minutes to an hour before it gaps up before taking the trade. Okay, not necessarily, but this is to be on the safe side, especially if you're a beginner trader. And then, guys, it's time to play ball. Define your entry area, your stop area, and your target area. Remember to always position size according to your account size. And remember, if you're doing this at the very beginning, use less than 1% of your account per trade because you're in the learning period. Okay, and then pull the trigger, take the trade. Okay, take the trade. And number 10, have a money management plan in place. After it triggers, remember, don't over manage it. If you sit in front of the computer, especially in a swing trade, you're going to find reasons to get out of the trade. You're going to find reasons to choke that trade. Okay, don't do that. Walk away. It is a swing trade. It's not a day trade. If you want it to be a day trader, go to your day trading account or, you know, do something else. Okay, remember, it is a swing trade. Give it time to develop. Okay, for my favorite part, and I think we have about 30 minutes left, and we're going to talk about charts. Okay, so like I promised you guys, today we're going to talk about some of these stocks, and today we did have earnings from Apollo, we did have earnings from STC, and aftermarket, remember, we did talk about BBBY, we did have earnings from TCS, and tomorrow, guys, we have Infi, and this is what I'm going to show you a chart of. And then Monday, we're going to kickstart aftermarket with Alcoa. And the big surprise, we're going to get some really great moves in the market, and that is financial starts, guys, with JP Morgan I'm sorry, JP Morgan right here. And on Thursday, we're going to have AXP. We're going to have Bank of America, C. And then, guess what, guys? Smoothly, they're going to start reporting the tech sector. We're going to start with Intel, one of my favorite stocks, Lennar, and SCHW. But before we go into these charts, I just want to remind you guys that I'm going to reserve time for you today. That's why I try to rush a little bit through the theory, because I think it's most important to look at charts and to see how they develop and what I look at charts and what I see in my entries. But let's not forget, guys, I have Trade-A-Thon 20 stocks to own in 2015. So very excited about that, and we're going to go through all those 20 charts as well. So we have a lot to cover. Okay, so now we're going to go 2 charts here. Let's just take this off. Okay. All right, here it is. Okay, here it is, guys. Everybody see the chart? Okay, perfect. Okay, so let's start first with Apollo. Okay. We're going to go to the daily chart. Okay. It reported earnings pre-market. Okay. So this is one of the reasons why you should not be in this trade. You should not be in this trade ahead of earnings. Okay. So you don't have any surprises. At this point, this is a very strong uptrend here that it has developed on the daily chart from a swing low, $23.30, to a high right here about $34.50. So overall, we have a bullish image right here, trending stock. Now, all of a sudden, pull back right here, and this is expected, especially, like I said, before earnings, stocks tend to base. And remember, some of these traders that were in from this, that capitalized on this beautiful swing from the swing low to the swing high, they actually got out of the trade easily, all the way into the support level of about $31.50. So around this level. So what happened this morning? It gapped down. Where did it gap down to? Well, it gapped down below this $29 area, gapped down below this 200 period moving average on the daily chart, and it continued to bleed throughout the day. Okay, it continued to bleed throughout the day. Now, let's go to the hourly chart to see what the general psychology was behind it. Okay, gap down, consolidated, and it remained right here, $27.50, very, very weak. So what's going to happen tomorrow? What's in store for Apollo tomorrow? Well, overall, what happened here is that it really became a really weak stock. Okay, really became a very, very weak stock. And if this, if Apollo is going to continue to break $27.50, it has odds of continuing lower. How low can it go? Well, let's go back to the daily chart. How low can it go? Well, there's a tradable void right here into the $23. So this is the target. This is a huge, huge target on this. But what happens here? Let's go back to the hourly chart, because if this low is not going to be, if this $27 and about 50 cents or $27 with confirmation under $27.25, it's not going to break here. Okay, if this is going to break here, this has odds of pulling lower with the first target into the $25 and about 50 cents, with the secondary target into the $25, and you're going to have your third target into the $24 and $23 areas. Okay, but let's go to the hourly chart. And what happens? Like, we're going to wait and see what the price situation remains at this level. And so far, we have a lot of choppiness that has developed here. A definite weakening in this area. And guess what? If this, let's say, if the market conditions are going to be extremely bullish, even the weakest stocks are going to be pushed higher. Because remember, Apollo comes from an uptrend right here, okay? So what happens here is that if we break $28.50, it has odds of continuing higher into the gap of resistance right here at $28.87. Now, if you want to give it a little bit of confirmation, do not trade it and just bracket this gap. Bracket gap up resistance at $28.88 and gap down support at $27.26. So this is basically what you do with gaps, and especially if you're a beginner trader and don't want to read into the psychology of the intraday trader. So you're going to go by this bar on the daily chart for your future price movement. So guess what? Number one, it becomes super simple, because if it trades below $27.25, boom, it goes down. But what happens if it trades above $28.85? Well, guess what? It has odds to continue higher and higher and higher and higher and higher and higher and higher. Where to? $31.55. $31.51 is the gap, is the close of the gap right here into a prior support area from Wednesday, actually from 3 Wednesdays ago, okay, from 3 weeks ago, 2 weeks ago, okay, from the support level, $31.51. Okay, so that is actually a good risk to reward ratio for this trade up to this area. And what it means is that if Apollo will reach this area again, it will transform into a strong stock. And the push higher, and it can actually push higher. Okay, it can actually push higher and go back to this high of $34.55. Okay, now let's take a look at another company, one of my favorites, and I often day trade this, love to trade it, STZ. Okay, so what happened with STZ? STZ reported earnings pre-market today. Okay, so all these charts that I'm going to show you here, these two charts right now that we're going to talk about, reported earnings today pre-market. The next two are going to did report earnings after market today, and then the next ones are for tomorrow, Monday, Wednesday, and Thursday. And this is a game plan of what you can watch, so have these on your list, okay? So what happened with STC? For this, I'm going to show you guys the overall image. I'm going to show you guys the overall image right here, okay? So what we have right here is the monthly chart. This is actually a platform layout, and if you guys like my platform layout, okay, I can share it with you guys. I can share you a link. This is Thinkorswim platform. This is actually a platform that I teach on. Okay, so basically what I have here is a 1 minute, 2 minute chart, 5 minute chart, 15 minute chart, 1 hour, daily, weekly, and monthly chart right here. Usually when you start your analysis, you have to do a top-down analysis. Start with the largest time frame. Start with the largest time frame because that's going to give you the overall trend, and it's easier to see. Although you're not trading the monthly chart, it is easier to see if you have a continuation, if you have a breakout, if you have a sell, all these things that are going to influence your intraday trading and your swing trading. Also, then move to the weekly chart, and you can see the overall movement just like you see in this one, but in more detail. So you can see the symmetry of the movement, psychology behind it, and everything. You can see moving averages and a lot of information that is going to give you a lot of clues on how to trade it. And then move to the daily chart so you can see the gap up, and you can see the movement. You can see the gap up or the gap down or the continuation of the pattern. Okay, usually swing traders use the hourly chart to define their entries, and this is what I use to define my entries. So in this case, in STZ, we get a gap up. The gap up occurred above resistance area from this high right here of 105.50. All right, and it gapped up today, recorded a high of 109.24. After it reported this high right here, the stock based, and you can see that it respected the area of support around 106.75. You can see it right here. You can see this line that acts as a lot of support for this gap up. So gap up support, super heavy and hefty right now. Okay, now what's going to happen is that, of course, it gapped up into an area of an overbought situation right here, and this is why it based. Okay, but what happens if this is going to break 109? It means that it has a strong odds to continue higher. And I did calculate projections on STC. Now we don't have time to show you here. I would have loved to. How to calculate price projections for stocks, for ETFs, for A-minis, for et cetera, of Forex. But all I can tell you that I've done projections for STZ, and it's a strong contender for a medium and long-term target of 110 and 125. Then that's for a long term. So STZ 125. Okay, so basically what I'm saying right here, look at the sandwich that it has created here. Remember our Apollo trade with our double take on it. If it trades above the high, it might have odds of continuing higher, and if it breaks the low, it might have odds of continuing lower. Now, the more it resides in this area and the more it bases in this area and consolidates, the more odds it has to continue higher. So therefore, watch this very, very carefully. Okay, so STZ, a strong contender over 109 can continue higher. Now, I told you that we're gonna take a look at BBBY. Okay, so overall, guys, I always look, and let me just refresh these charts real quick. I always look, and this is what I look for. Especially in my day-to-day trading, I like to have all the time frames because it gives me an instant look. So in less than 20 seconds, I know if that stock has odds of going higher, lower, and in less than 10 seconds, I can see if if I spot an entry. So remember, it's super quick once you have all your technical analysis down and you have a proper setting. Okay, once you have a proper setting. Okay, so here it is, guys. This is the monthly chart. It's running into resistance right here, so some profit taking can be in order. So remember what I said, guys. Even if you take a trade at least 3 days ahead of earnings, make sure you get out ahead of earnings, right? So today would have been the day when it offered you multiple opportunities to get out, right? So you would have profited from a huge day up yesterday and a perfect day today. And again, a lot of consolidation here. That would have suggested what? A continuation higher. But guess what happened, guys? Let me go back to these charts right here. Okay, and let me show you what happened. Okay, let me show you what happened. So we ended the day here. Okay, look what happened. It spiked to $79.90 and huge price testing the 20-period moving average and testing what? Look at this area, guys. I'm going to draw a line right here. Okay, look at this area, guys. Prior swing high is resistance and forms the shelf of support for future price action, right? Easy as that. It tested this area and now it bounced. Now, remember, there's still some time left for aftermarket trading, and there is still going to be time for pre-market trading. So we're going to see how these traders interpret the actual earning reports for this stock. Okay, so this is where it bounced from right now. We have a prior swing high right here, which is very, very close to this area, okay, which is very close, again, to the whole number as well. So we're going to see tomorrow what happens. Now, this is why, remember, and I emphasize like this, perfect buy setup right here, but if you don't get out, and remember, this is the stop, this is your entry, and remember, guys, if you don't take your profit at least a day ahead or before the close, okay, this is what's going to happen. You're going to find yourself in a really unpleasant situation. Do I really, take out all my swing trades? 99% of the time I do. 99% of the time I do. I don't like surprises, and I'm never going to live through, a kind of surprise like this. I love, when I put my head down on a pillow, I really love to sleep, so I really don't want to worry. Okay, so this is one of the reasons. Okay, here it is, guys. Tomorrow, Infi will report earnings. Okay, here's the perfect situation. Let me just refresh these charts real quick. Tomorrow, Infi will report earnings. Here it is, guys, for the swing traders. We have a lot of resistance form right here at $32.70 from these two pivot highs right here. If we're going to get good earnings reports, and remember, not necessarily, but if we're going to get a gap up above this resistance area at around $33 or so and change, we might have odds of continuing higher and continuing, let me just refresh this one real quick, okay, and continuing the trend to the previous high of $35, which is the high for 2014, okay? And by the way, guys, it is very, very important to know that 2015 is going to be a very volatile year. Now, remember, we're getting very close to election year, which is next year. Usually election years are trend years, and historically they have been trend years from early January until about October or end of October. You're going to see that stocks and the market was definitely in an uptrend. Now, it is a very difficult year. Remember, don't treat 2015 as if, like you've treated 2014 or 2013 or the year before. Remember, you have to adapt your trading. Remember that bull cycles remain, are active about 5 years, okay? We're already going on 6. Okay, so this, and of course, this cycle comes very close to election year. So therefore, we might push through, and we might have a continuation in 2015 for this bull continuation. So remember, the market has proved so far from the last 2 to 3 years that all the dips were bought. We had the first sell-off in the market last week, okay, at the beginning of this week, all right, and then we had a recoup in price yesterday and today, okay. So what that means is that they were immediately bought. If we continue this streak with good earnings, remember that we might have a really strong first quarter, and then again, we might see a continuation in the trend. Okay, so because it's going to be an extreme volatile year, it's not going to be a very, very good year for those of you that are investors. Why? Because it is going to be volatile. We're going to have spikes high and then corrections, steep corrections, and therefore they're not going to capitalize a lot from these movements. This is going to be the hedge fund year, guys, and the hedge fund managers are really going to profit from 2015 because they already have the pattern set up and they got used to it in 2014. And then again, this year is going to be for active investors, and this year is going to be for investors that are going to look to buy the dips and sell the rips. So remember, guys, you're going to be very focused, and this year is not going to be like anything else. We're going to expect extreme volatility throughout the year, and we're going to meet again probably in the next month or 2 months or 3 months, and I'm going to remind you guys, and I've done so last year and the year before, and it all came true. Okay, so very important, guys, treat 2015 differently and be very active and proactive in what swing trading, especially in your swing trading. And remember, if you're an active IRA trader, don't just set it and forget it. Remember, buy on dips and sell on rips. Okay, so going back to INFI, I just wanted to take a little time to talk to you guys about that. So INFI right here, a break over $32 and about 60 cents can offer you the opportunity for a continuation higher. So all eyes are going to be on INFI tomorrow, and this is pre-market, guys. So again, watch this price action. Any gap up right here might have a continuation higher into the $35 area. And if you look on the monthly chart, and this is why it's important to watch the monthly chart as well, going to $37 and $40 for price targets. Now, let's go to JP Morgan. And JP Morgan is going to report earnings on Wednesdays, and they're going to kickstart financial earnings. Now, let me just delete these lines right here real quick. Okay, here we go. Perfect. All right, so financials are in an uptrend. They weren't, in their best year, but remember, as we're getting closer to election year, financials are good contenders to own in your portfolio, in your swing trading portfolio. So here we have it, guys. We have definite support, $58.25 right here. If this support is going to hold, if we're going to gap anywhere above $62 or even $64, we may have a continuation higher for JP Morgan. So watch this. I wouldn't necessarily short any gap down or any price under $58, but I would wait for a continuation higher. Okay, skipped one. Alcoa. Alcoa will report earnings. It's actually the first one that will kickstart earnings season. It's Monday after market, and we have a beautiful consolidation here at $16. I'm going to look to go long Alcoa over $16 after earnings. I see a strong potential on this one with a target into the $20 area. So $17, $18, and $20 area as the last target, and this is Alcoa. Also, Intel is going to report earnings on Thursday. So remember, guys, pay special attention to financials. If financials are going to report good, good earnings, remember that the market has a good potential to run higher. Remember, whenever financial sector is on the market side, it's just going to power the market and going to go full throttle higher. Okay, here it is, guys, and Intel techs are very, very strong. Again, if we're going to get a gap up in Intel, $38 is probably going to try to go to $38 before it reports earnings in about a week from today. This has a good potential to reach $40 area. So very, very good odds. Okay, so this is all what I have for you, and this is what I'm going to look for And now I'm going to share with you guys, let me just get back. Okay, I'm going to share with you guys some stocks that are some stocks that I really that I'm looking to own in 2015 that have good candidates. First of all, we're going to start with some healthcare stocks, Celgene and Guild. I think these are strong contenders for 2015. And don't forget, guys, next week kickstarts as well, the JP Morgan Healthcare Conference, and you're going to learn a lot about you know, new FDA approvals, pending patents, and all that. Just want to share with you guys Celgene really quick right here. I just want to show you the monthly chart rather. Okay, here it is, guys. 2000. Here it is. December 2012. Right here. I'm sorry, December 2011. In January we had healthcare conference. Look what it did. Went higher, came back down, tested right here, and then November, December kick-started again. Just January. This is the month of January with the 13. You can see the price bubble, and you could also see the 13 on the bottom. 2013 big rally. Okay, so you're going to see that every single time we had the healthcare conference, Celgene was a performer. So next week, guys, all eyes are going to be on that healthcare conference. Celgene and Guild are going to be only two of my list from my healthcare that I'm going to watch very carefully. Also Target and Costco, also Kroger. These are going to be top watches. More and more of these retailers, and especially food retailers, are going to go organic. So this is a very big thing. So be very careful. These might go higher, as well as GIS, GIS, Coca-Cola, Kraft, SWY, good contenders for stocks to go higher. Again, oil prices lower, travel higher, look for travel stocks, hotels, Marriott, Hilton, etc. Look for Delta, LUV as well. Prices are going to go up. FSLR as well. ZTS, perfect for higher as well. With the healthcare, it's the division from Pfizer. Also Lulu, Nike, GM, and Ford spiking higher. Pay and THC. These are my 20 stocks that I'm going to watch in 2015. So wait for setups on these. Okay, so guys, are you ready to convert all this earning education into cash? Philip, I am not nervous about the market turnaround, and this is because I'm trading one day at a time and trading 1 week at a time. And that's why trailing stops are in place. That's why projected targets are in place. And that's why price retracement, precise calculations to where the market can retrace to are in work. So I'm not nervous at all. Okay. All right. So guys, if you're ready, I can invite you to my Active Investor Swing program. It is a program dedicated for traders that are serious about trading stocks and ETFs. It is a signal service. I swing and position trade. We already have Wendy's as position trade. We already have Ford as a position trade. So most of the stocks that you already seen, we already have a few of them with very good entries. I can offer you a 30-day test drive for $49.99 for the first month. Plus, you can lock in $99 for the rest of your subscription. From regular price is $149. And with this, you're going to get real-time trade alerts with entry, stops, targets, and complete management for the life of the trade. And guys, this is a hand-holding process, especially for those of you that are new to trading. Okay, and then again, you have 2 to 5 or more swinger position trade alerts each week. Why? Because sometimes the market is not doing much. Remember, the latter part of earnings season, that's when you're probably going to get 1 or 2 trades per week. And then the active part, 5 or even more trades. You're going to get real-time updates on market conditions and on your stocks constantly. So I'm going to hold your hand throughout the whole process. So whatever movement I make when I move my stop or and I take a trade, you know all this ahead of time so you have time to act. And also you get a detailed weekly newsletter with market projections, the following week's earnings reports, economic releases that are likely to influence the market, et cetera, et cetera. Plus 1 hour, guys, trading strategy and mentorship session for all the members. You can ask all the questions. This is only a 48-hour sale, and I only have 50 spots. So if you want to register, go to tradeoutloud.com. It's on the front page. Click on the hot offer. It'll take you to the page where you have more information. So thank you so much, guys, for having me here today, and I really look forward to seeing all of you again.